What is up, guys? Farmer Taiki here. Today I'll be starting a new series called Farms of the Week, where every Monday I'll just briefly go over the farms I'm in as well as the farms I'm looking at. So hopefully this video, this series, acts as like a good overview for, every Monday you can like tune in and see like, okay, like what's Taiki looking at and what are the good farms available. So if you like the content, please like and subscribe and leave a comment in the comment section below. Let's get started. So as always, this is not financial advice. You have to do your own research, right? I'm just like briefly sharing what interests me as of today. So on my live stream on Sunday, I mentioned that I've taken all of my stable coins from Polygon to the Terra ecosystem, right, on UST. And I'm not going to go over it in too much detail just because I've made multiple videos on it and I'll make videos in the future. But just a quick overview of what my plan is. So 16.4K, like what am I doing with that? So just to increase some of my Luna exposure, because I am long-term bullish to the ecosystem, I just took 6.4K and turned it into Luna, right? I bought Luna tokens, right? And then with the remaining amount, I'm just going to deposit all the stable coins on Anchor where I can earn 20% APY. And the cool thing about the Terra ecosystem is that on Mirror, right, the Mirror protocol is the synthetic asset protocol, I can use AUST, which is, I guess, my claim. Let's just get into it, right? Because this might sound a little confusing. So this is the Luna that I purchased, right? It's markets are down today, so it's down a little bit. I mean, it's like relatively the same amount. And the cool thing about Anchor is that you can borrow against your Luna if you put it in as collateral. So and you're also being paid to do so. So because Luna is a more volatile asset, I'm just being pretty safe with how much I'm borrowing. So I'm borrowing this much. And the cool thing about Anchor is that I'm being paid to borrow because of these liquidity mining incentives. Although I'm paying 17% interest rate to borrow these dollars, which is pretty high, Anchor is paying me 104% paid in the Anchor token. So my net APR, so I'm being paid to borrow this much, right? So I put 1,500 plus the 10,000 into Anchor, right? This is this much. I put in that much on Saturday, so I guess every day I'm earning like $6, pretty nice. And as of today, I have like almost 4 Anchor tokens, right? Which is worth $8. So, being paid to borrow, pretty nice. And the cool thing about, I guess Anchor is that like when I deposit UST into Anchor, I get AUST, right? AUST is my claim on, my deposits on Anchor. And using that AUST, I can go on Mirror Protocol, which is a synthetic asset protocol, right? Even if you're not an American, you can like have price exposure to these stocks and whatnot. And there's also this liquidity mining program where I can be paid to short, where essentially, although I have 0 USD in my balance, this is AUSD, right? This is my claim on the 11.5K here, right here. And I can use this as collateral and just mint, this is MIAU, which is gold, right? Like gold is not going to move that much, so it's like whatever, where I can mint up to 50% of the value of 11.5K, and then Mirror is incentivizing me to short it, right? To just sell the asset, just because these assets have like a premium, so like they just want to close that premium, so they're gonna pay you to short it. Sorry if that sounds confusing. I'll make more videos in the future, so just a brief overview. This is what I'm doing. I wasn't able to do this today just because I was too busy, and I can only do this during market hours in the US. But I'll be doing this the next couple of days and I'll make a video on it. And I guess on Polygon, I'm still in this one, right? I have all my Bitcoin here, roughly like $15,000? Yeah, earning roughly 6%. It's not that much, but I've been busy, so I just like haven't had the chance to do so, move my assets. But I'll most likely be moving into this pool, the A-Try crypto pool, where I can earn roughly like 28% on my Bitcoin, right? This is a 3 asset pool, meaning that you'll be providing liquidity, the 3 assets, stable coins, Bitcoin, and ETH. So there is impermanent loss risk. However, like this is a good calculator. It's called baller.netlify.app, where you can kind of calculate potential impermanent loss for 3 assets. So even if like Bitcoin or ETH goes up, I mean, I'm not really taking on that much impermanent loss. So I don't really see an issue, or like I know a lot of people are like afraid by like this like concept of impermanent loss, but like if you do the math, like you really shouldn't have to worry about it. And I also have to talk about Iron Finance, just because this thing launched today and it's already at $1 billion, or the TVL is already at $1 billion, which is kind of insane. I guess no one really learned from it the first time. This is something I'm not gonna enter, right? Just because like it seems a little too risky. But if you do your own research and you think it's fine, like maybe it's something you're interested in, because the farms are pretty good. And I mentioned this on Twitter, but like the Iron Finance developers, like they're really good at developing like Ponzonomic like farms, because you can earn like roughly 400% APR on this 3 stablecoin pool, and it doesn't even include any of their assets, right? Because with Iron V1, like Titan and Iron collapsed, right? Because it just was not designed well. So I guess the developers were like, you know what, like I don't want to risk our tokens to like get wrecked, so let's just give away everyone who like is farming with stablecoins our governance token. And you have to understand that like they are like minting over 1 million ICE tokens every single day. So obviously the price of ICE should go down, right, mathematically. And this is like, so far this is like the price of the price chart of the ICE token. I'm surprised it hasn't even gone down like more, because the whales are like farming this to oblivion. I heard Alameda is in this, and I'm sure that Alameda is going to farm and dump this. But like maybe I personally wouldn't recommend anyone like purchase this. But you do you, right? It's your money. It's not my money. And yeah, the developers were also like, yeah, we already passed $1 billion in a day. So pretty impressive launch. I'm not going to be participating in it just because I have all my stable coins on Terra ecosystem. But this is crazy. I guess in terms of risks, right? There isn't impermanent loss risk just because you're providing, I guess USDC, Tether, and DAI, which is, you're not really exposed to the ICE token or like whatever stablecoin they're going to launch in the next couple of weeks. I guess the only risk is like the ICE token. It's probably going to go down in price. So like farming and dumping might seem like the best option. But yeah, Iron Finance, it's back. And I guess right now the amount of liquidity in the Polygon ecosystem is roughly $8 billion. So, there is a limit to like how much this thing can go on. I think Iron Finance V1, I think it capped at like 2 to 2.5 billion. It might go over that just because I guess people might seem more confident in this, but there's also like the rug risk. I can't say that for sure just because it just launched today. There's not that much information on the safety of these things, but hey, it's something to look into. Okay, back into I guess some less degen Polygon farms. So I've talked about Mai Finance, Qidao many times, but Mai is their stablecoin. It's an over collateralized stablecoin, so it has a lower chance of like getting off a peg. But this thing has been yielding 30% APR for a while now. I've mentioned this before, but I farmed 1,000 of this back in May. I sold some at like $3, but I'm still holding these just because like if it goes up, then cool. If it goes to 0, then it's whatever. Do your own research. Also, DFYN I think is also a pretty good one. I farmed this much DFYN in the past month or so. These tokens are vested. However, the APRs are pretty good. So, UST, USDT, this is a stable coin. You're earning 60% APR. If you scroll down, there's other stable coins. Like if you're scared of UST, then you can like farm USDT. This one, earning 40% on these stable coin pools. So, also this token, I'm just farming to accumulate. This thing can go to 0, but I see potential in this, so I might as well just farm it and hold on to it, right? I earned this for free, so why not? Also, Kyber, for me personally, was a disappointment because I thought these yields would be higher, but I guess I'm spoiled from these other farms. 20% on stable coins is pretty good, and Kyber is, I guess, not like, I wouldn't consider them a blue chip, but they've been around for a few years, so I would consider them to be safe. And if you want to, I guess, farm Matic and KNC, like this liquidity pool, then you can earn 100% APY. Not too bad. And in terms of stablecoin farms, I have my eyes on this, right? This is Balancer, right? So this is, depending on like which pool you enter, there's like many assets, so you might need this calculator here, right? Impermanent loss calculator to like, I guess, think about like potential risks. But this pool, USDC, DAI, Mimetic, and USDT. Mimetic is Mai, right? So this is from Qidao. They didn't update like the token name, but it's a stablecoin farm that's earning 51% APY. Not too bad. They're all stablecoins, so little impermanent loss risks. Something to consider. And lastly, I was going to go over Harmony. Harmony 1, They have a liquidity mining program with Sushi Swap, and this is a Harmony bridge. I would recommend this, I guess, outside of any other bridge, just because I think this thing is made by Harmony. So, if you want to port over your assets to Harmony, this is it. But, right now, okay, this is Polygon. Let me switch over to Harmony. Yeah, but I believe these liquidity mining programs, Sushi and Harmony allocated $3 million for the next 12 months. So if you think about it, like those yields are probably going to go down just because 3 million over 12 months, that's pretty unimpressive. It's better than nothing for sure, but it's pretty unimpressive. So all it takes is a few whales to come in and these yields will be diluted. But, maybe like people are overlooking this just because, just because the 3 million number is too small. But for now, APRs are pretty good, right? So let's see, where's the stablecoin pool? I believe this is a stablecoin pool earning 22%. This is a stablecoin pool earning 20%. But for something like the Harmony token and a stablecoin, like 160%, that's pretty good. So if you're bullish on the Harmony 1 token, Sushi, like Bitcoin or ETH, like you can earn triple-digit yields. And Sushi, I consider is safe. So this is something to look into. So hopefully this gave you a good overview of farms as of now. I know I missed a lot. I mean, there are like hundreds of farms every single day, so I can't capture all of them, but these are all farms that I've considered entering or have entered. So hopefully this helped. Thank you guys for watching and have a nice day.